Ladies and gentlemen, good day and welcome to the Nava Ltd Q4 and FY'25 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you and over to you, sir.
Yeah, thank you, Shruti. Good evening. On behalf of ICICI Securities, I welcome you all to the Q4 FY'25 earnings call of Nava Ltd. Today, we have with us from the management, Mr. Ashwin Devanani, CEO, Mr. G.R.K. Prasad, Executive Director, Mr. Nikhil Devanani, Executive Director, Mr. K.V.S. Patel, CFO, and Mr. V.S. Raju, Company Secretary. We'll begin with the opening remarks from the management, which will be followed by Q&A. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining Nava Limited's earnings call for the fourth quarter and the full year ended March 31st, 2025. We appreciate your continued interest and support. For FY'25, Nava Group delivered multiple milestones. Our consolidated revenue was INR 4,135 crores at a year-on-year growth of 4.6% and a PAT of rupees 1,434 crores. Our revenue and profit for the year are the highest ever. All our major segments, metals, mining and energy, have shown robust growth as compared to last year. Our ferroalloys business has significantly turned around and contributed to the improvement in the profit in FY'25. We have also seen significant improvement in MEL's receivables position. Post the close of the financial year, MEL received $55 million, which has helped it repay its shareholder loan in full to the sponsor. With an objective to improve shareholder value, we completed two corporate actions during the last financial year. A stock split in quarter 3 and a share buyback for rupees 360 crores in quarter 4. In addition to these, we continue to maintain our dividend distribution at a healthy rate. Our new projects under Mamba Solar, Nava Avocado and Kawambwa Sugar are showing encouraging progress. We are progressing on a robust cash and capital allocation plan which sufficiently meets our expansion objectives. We remain committed to optimizing costs, improving efficiencies and driving strategic investments to create value for all stakeholders. With that, let's dive into the specifics of our financial performance as I open the floor for any questions you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to per participant. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of A.M. Lodha from Sanmati Consulting. You may proceed.
Good afternoon, gentlemen. Hello.
Good afternoon.
Good afternoon, sir. Congratulations, good set of numbers, sir. I have got two questions, sir. Number one is relating to a tax provision. Your tax provision in standalone is 27. I am talking of this quarter, sir. In tax provision of 27.44 crore in quarter 4 as standalone. Whereas in consolidated, I found it is tax provision is only 6.39 crore. According to me, your tax exemption in MCL should have been expired in this December 24. So in March quarter 25, the MCL would have been eligible to pay 50% of the eligible tax, that is the rate of 35% in MCL. So you please, number one question, this is you please clarify this position. Number two, right back. You have written back some 47.52 crore out of the earlier provision made for the credit loss. So just I wanted to know how much amount is still pending to be written off on the amount when the amount will be received from the NCL for the areas. This is the two questions, sir.
Yeah. So from this perspective, we still have $105 million, which is pending to be collected, and the corresponding ECL provision that is existing in the books is $16.8 million. On the tax rate, in quarter 4 for the consolidated, the tax expense is 21 crores as per the financial statement. And the MEL tax exemption that we have said, that tax exemption continues till the end of financial year 26. And only after that we get into the next regime of 50% tax exemption for 3 years, and after that 100% beyond that. So we are still in the tax exemption for MEL, even for the next financial year.
100% tax exemption for next financial year?
Yes, that's it.
It was 5 years from the date of commencement of the business.
On the date of commencement of the taxable income.
From the date of commencement of?
Taxable income, that is after adjusting the investment element, the taxable income comes in. So we have 2 more years to go. I mean, this year and next year.
Next year. We will have it up to end of financial year 26.
Okay, sir. Thank you very much. I will rejoin the queue.
Thank you. The next question is from the line of Shri Krish Agarwal, an investor. You may proceed.
Good afternoon, gentlemen. My questions have been answered, so please go ahead.
The next question is from the line of Nidhi Shah from ICICI Securities. You may proceed.
Yes, thank you so much for taking my question. So firstly, on the solar power plant at Mamba, I wanted to know what is the cost of that plant, and at the same time, do we have a tie-up for Q1 for that 150 megawatt or not?
Sorry, your first question was on the total cost of the solar. So the project cost that we have envisaged is $90 million. 63 would come in the form of debt and 27 come in the form of equity. What was your second question?
So on the NPL, the 150 megawatt power plant, I wanted to know if we have a tie-up for Q1 for that.
Yeah, I think for the 150 megawatts, we have been looking at entering into short-term bilateral contracts, of which we have a commitment until September.
All right. And lastly, I wanted to know what is the update on the construction progress of the 300 megawatt expansion?
Yes, progressing well. I think we're still sticking to the original schedule of commissioning in August 2026.
All right. So I'll get back to you for further questions. Thank you.
Thank you. The next question is from the line of Viraj Mahadevia from MoneyGrow. You may proceed.
Hello. Hi, Ashwin. Congratulations on the shareholder value enhancing measures. The $7.50 per kilowatt hour for the new plant is really lower than the old plant. Is that correct? And if you can throw some light on that?
Yeah, no. So the tariff for solar is actually 7.8.
Okay.
That's the tariff that we have negotiated. That kind of escalates in a year on year. Yes, it's less than, the tariff we are getting for the coal-fired power plant, which is normal. Because it's a
Okay, so the 7.5 is for the solar, is it? Zambia Solar.
Yeah, 7.8
Okay.
is for Zambia Solar.
And the second 300 megawatt, is it similar to the first thermal tariff? 9 point something?
Yeah, no. So the tariff for the phase 2 300 megawatts is 9.5 cents. It starts with 9.5 cents, and then year on year there's a slight escalation.
Understood. And you mentioned the target timeline for Zambia Power is August 26th. How about the sugar plant and the avocado plantation? When will they start contributing to revenues?
So in terms of avocado, we should actually get our first commercial fruit. It will come in a small way, in a very phased manner, because as the trees grow, you get your fruit. So when we started in a small area of 50 hectares, that should start fruiting, and we should get our first commercial crop by the end of this year. That will be in a small quantity. And in terms of the sugar, March 28 is what we're looking at.
Okay.
The commission.
Understood. And the last question is the balance 100 million due from Zambia. When is that likely to come through for the arbitration award? Can we expect it by September quarter?
I wish. So I'm not going to put any. We're in constant discussions with the utility. They've done a great job in terms of at least paying us what they paid us to date. But we forecast by the end of this financial year we should get the remainder of the amount.
Okay. So what is your net debt then as of March 25? What is net debt overall on console level?
I'm sorry, can you repeat that?
Sorry, what is the net debt of Nava at the console level as of March 25 prior to this $55 million fee?
55 million receivable. It doesn't appear as a debt.
No. I'm saying prior to receiving the 55 million, which came in April per your press release, as of March 25, what is the net debt at the consolidated level?
No. I think you're asking about Nava's debt, right? Consolidated debt.
Nava's consolidated net debt, yes.
Yeah, so apart from the phase 2, which is 300 megawatts in Mamba, where we have a current debt of about 94 million, we don't have any other debt at the Nava level.
Understood. So that's the only debt, call it 100 million.
Yeah, and by the way, the phase 2 debt is non-recourse.
Understood. But presumably that will also get net off in Q1 with the 55 million that's come in April, right? So technically
55 million has nothing to do with it. 55 million is whole.
You could actually consider net debt being zero in the sense that the cash balance is much more than the debt that's drawn for phase 2.
Okay. Understood. Thank you. All the best.
Thank you. The next question is from the line of Anand from CIS. You may proceed.
Sir, congratulations on the wonderful set of numbers. The first question is that, do you have any tax concessions on the phase 2 of the project, sir?
At this point, it is not there, but we would probably go for that kind of a tax relief once the plant is commissioned. This actually will get taken in about 3 to 4 years from the date of commissioning, post the investment element being absorbed by the company.
Okay, sir. Also, how many years of the PPA project?
The PPA is for 20 years.
And how many years is remaining, sir?
You're talking about phase 1?
Phase 1, yes.
The phase 1 PPA started in 2016 for 20 years. So we will have 4 years to go.
Okay. And sir, what's the deadline for the solar plant that we have set internally? If you can...
Sorry, can you repeat yourself?
So what kind of a deadline are we looking at for the solar power plant that we're going to set up?
Yeah. So we're looking at commissioning it possibly by July 26th.
Okay. Okay, sir. I'll come back in queue for further questions. Thank you.
Thank you. The next question is from the line of Vijay P., an individual investor.
Good afternoon. I hope I am audible. I'll begin with congratulating Mr. Ashwin Devineni on his elevation as the Managing Director of the company and Mr. Nikhil Devineni to join the board as Executive Director. My first question is for Mr. Ashwin Devineni. The press release was silent on the 300 megawatt power plant expansion, but then people have asked the questions already and most of my queries are answered. There is no mention about the Ivory Coast project of manganese mine and the ferroalloy plant and the further concessions received in Zambia for critical minerals, etc., and iron ore. Could you please elaborate on that?
Yeah. So I think I'll let Nikhil answer the Ivory Coast question. But if I understand you correctly, your question on the expansion, you don't have any right now, right? Has it been answered?
No, I was saying the expansion was not referred to in the press release, but then people have already answered. You already answered the questions that I had about the timeline, about the completion schedule, etc., which you have reconfirmed that it will be August 26th.
Yeah. So on the Ivory Coast, as we've disclosed, the plan is to set up a 22.5 MVA furnace to start with as phase one, producing about 40,000 tons of silicomanganese per annum. And this would be coupled with a captive power plant via biomass generation of about 25 megawatts. Now, this entire project essentially hinges on two main factors. One is raw material security, and the second is acquiring the land. Now, on the raw material security, we have been allocated two mines. One which was already explored for a period of 2 years, and we concluded that in terms of taking it forward with respect to commercial mining, it is not a viable prospect. The second mine, which is in the northern part of Ivory Coast, is about 360 square kilometers, out of which about 27 has been shortlisted as a prospective zone. So the finer geophysical studies are ongoing as we speak, and I think in about 6 months to a year, we should have a clearer picture in terms of how the potential is. With respect to the land, we're working very closely with the government of Côte d'Ivoire. I think in about 3 months, we should have a clear update. Yeah.
Yeah. The second one was the question about the mining concessions in Zambia for critical minerals and iron ore.
Yeah. So, I mean, there were two basically that we had disclosed previously. One was with regards to the magnetite, the iron ore. We had conducted extensive exploration activities, including drilling. And what we found was, while the grade of the magnetite was very favorable on top, as we kind of went down, it started to go down in terms of quality. And we finally concluded that the commercial viability in terms of mining probably wasn't there. So we decided to take a halt on further activities at the iron ore of the magnetite mine. Whereas on the lithium, exploration activities are currently underway. We're sitting on 2 concessions of lithium spanning about 11,000 hectares. So it's quite a large piece of land, and exploration activities are currently underway.
My second question is for Mr. Nikhil Devineni. I believe that he is now looking after the ferroalloy business in India. The ferroalloy business has been at a nearly standstill for the last many, many years. Do you have any plans to grow in ferroalloy business in India?
So when you say standstill, I assume you're talking about in terms of...
No, what I'm talking about is the capacity. The capacity growth, and the capacity is always underutilized.
No, I think I would not say underutilized, because if you look at our plant load factors over the last couple of years, it's close to near optimum levels, barring the unplanned shutdowns that we've had in a couple of instances. But in terms of expanding the production, it really does not make sense at this juncture, given that there is a massive oversupply of material in the market. I think the only time we would seriously consider an expansion within India is probably once we get our hands on the raw material source. Because today that contributes about 40% of your entire costing. And if we do not have our own raw material source, we are essentially devoid of any competitive advantage. So given today's market, it really doesn't make sense to expand without having that.
Questions.
Sorry?
Thank you very much. I have no further questions.
Thank you.
Thank you. The next question is a follow-up question by A.M. Lodha from Sanmati Consulting. You may proceed.
Hello. Sir, I have got two questions. One is relating to your maintenance shutdown for MCL, which happens to be every 2 years. When it is the next due, sir?
No, so we have our, we have two shutdowns annually. So we take one half yearly, which span across 15 days per unit, and then we have a major shutdown which spans once every four years. And that shutdown we are probably going to be taking during the early part of 2027.
27. Okay. The second question is, sir, other income in standalone has jumped from 79 crore to 188 crore. What is the component has increased by 100 crore, sir? Other income in standalone business jumped from 79 crore to 188 crore. So there is almost jump of 110 crore.
Yeah, in standalone, other income also constitutes the dividend from the subsidiaries. So in the last financial year, we have received dividend from two subsidiaries. So for standalone, it is shown as other income. Those two dividends put together is 110 crore.
Okay, sir. Thank you.
Thank you. The next question is from the line of Radha from PNK Securities. You may proceed.
Hello, sir. Thank you for the opportunity. I wanted to thank you for the buyback and high dividend payment. My first question was, until the commissioning of phase 2 of Zambia, which is expected to be in first half of FY'27, is there any incremental earnings growth driver for the company? As tax also is expected to increase to 15% because of the expiry of tax holiday. Hence, wanted to know your thoughts on the earnings growth for the near term.
No, just to clarify on the tax holiday, we also mentioned this previously in the call. The tax holiday will continue till end of financial year 26, post which we will get into the second slab of 50% exemption for the next 3 years.
So FY'26 end it will continue, then FY'27, like you had previously mentioned, first 2 years 75% exempt.
Yeah, from FY'27 onwards, it will be 50% exempt for 3 years.
Okay. So from okay. Got it. And sir, a bit more on the earnings growth driver for the near term.
Yeah, I think on the standalone level, in terms of ferroalloys division, we foresee a better scenario for FY'26 than for FY'25, mainly because we are seeing that the product diversification into ferrosilicon is helping out as the demand in the US particularly is increasing. And moreover, our dependence on the Japanese market has increased over the course of FY'26, which provides a reasonably better margin than, say, domestic sales or export to any other country. So on these two counts, we foresee that the ferroalloys division would is more encouraging for FY'26. Now, coming to the power sector too, as I mentioned earlier, I think most of about 60% of our power capacity is already committed up until September through the short-term bilateral contracts. The remaining 40% also has been committed until July. So we have some good visibility in that sense. Besides that, in terms of reducing our cost of generation, which allows us to participate more in these centers, we have done a diversification of coal procurement from what was existing to many other sources, which has reduced the net fuel cost. And furthermore, to add to that, I think you all must be aware that the final approval for Orissa to convert the 60 megawatt CPP into IPP has just come through. This would enable that particular unit to run at a much higher PLS than we've seen in the last year. So all these things put together, we see an encouraging sign in terms of FY'26.
So, just a bit on the ferroalloys division. So in the previous call, you had mentioned that you have low-cost inventory that will last till September 2025. So on the basis of that, since the final product prices are increasing, so I had assumed that the spreads would have improved in this quarter, and I expected a sharp jump on a QOQ basis in terms of EBIT for the ferroalloys division, which did not happen. So please give us some understanding as to how to see these numbers, and from the volume perspective, how much growth are you expecting from the ferroalloys division in FY'26?
So see, I can't, the market for ferroalloys is an extremely volatile one, so I can't put an exact number in terms of what the growth prospects are. But as you rightly pointed out, we are sitting on fairly low-cost inventory compared to where the market is today. That is definitely providing us with some cushion despite falling prices. But like I said, right now our main focus is not in terms of domestic sales, where there's a lot of supply overhang, but we are focusing more in terms of niche products in markets like Japan, where there is a reasonable margin to be made.
Okay, sir.
Sorry to interrupt, Ms. Radha. We may request you to return to the question queue again for your follow-up question, as there are several other participants waiting for your turn.
Okay, ma'am. Thank you, sir.
Thank you. Thank you. The next question is from the line of Sri Gopal Kankani from SG Kankani and Associates.
Good afternoon, sir. My question is that in spite of energy revenue operations almost constant in March quarter as compared to December 4 quarter, 24 quarter, the profit has come down from 351 crore to 296 crore in March quarter. So what is the main reason, sir? Hello?
Yeah, we're getting back to you. Just 1 second.
Okay.
So you are referring to the Mamba reduction in profitability?
No. I am referring to the consolidated financial statements, where in the segment revenue, if you see the consolidated accounts, consolidated revenue from energy operations is almost constant in March 25 quarter, 834 crores as compared to 833 crores in December 24 quarter. While the energy revenue is the almost same as compared to previous quarter, however, if you see the consolidated financial statements, the profit has come down to 296 crore as compared to 351 crore in December quarter. So what is the major reason for decline in profitability in spite of energy operations revenue almost same?
So at consolidated level, if you see the slight dip that we have quarter on quarter, that is mainly due to our MEL plant being on a shutdown. So that's the reason why the revenue quarter on quarter has also dropped by close to $10 million. And
no, sir. The revenue is almost at the same level. If in December 24 it was 833 crores, and in March 25 it is 834 crores. However, there is significant decline in the profitability.
Get back to you. We get back to you. Just referring to which slide you are referring.
Okay. And my second question is one more question, that if you see the cash flow from investing activity, an amount of rupees 1,325 crores is towards investments made during the year. And if you see the capital work in progress, there is increase of just around 475 crores. So where the balance amount has been deployed, sir, actually? Should I repeat again my question, sir?
Sorry, can you repeat the question?
Yes, I am repeating. If you see the cash flow from investing activities, it shows that an amount of rupees 1,325 crore has been deployed towards investment made during the year 24-25. But if you see the capital work in progress, there is increase of around 475 crore only during the year. So when you have invested around 1,325 crore, but the amount has been deployed towards capital work in progress is only increased amount is 475 crores only. So I think when you have shown investments apart from capital work in progress, is there any other investments also made during the year, sir?
So the other investments are mainly in the form of equity investment. So anything which is more than 1 year in terms of the maturity, it goes into the investment category. So the part of it is the capital work in progress. The other part is in the long-term investments.
Okay. So just I wanted to know what are the other long-term investments, because 1,325 is the investments, and out of this 1,325 only around 475 has been deployed in capital work in progress, perhaps this expansion of power plant. So where is other investments made, sir, actually?
So these are investments in bonds and other securities which have maturity beyond 1 year.
Okay. Okay, sir. I am waiting for your reply, sir, to my first question regarding decline in profitability in March quarter, in spite of energy operations almost at the constant level.
Yeah, we'll get back to you. We'll take it anyway.
Okay, sir.
Thank you. The next question is a follow-up question from Mr. Viraj Mahadevia from MoneyGrow.
Sorry, nothing from my side. I'm good. Thank you.
Before we take the next question, ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant.
Just a follow-up on the previous participant. He had asked about Mr. Kankani had asked about the drop in profit from the energy segment, though the revenue is same. So from a revenue perspective, as I mentioned, the MEL revenue has dropped quarter-on-quarter, and it has been made up by the other energy generating units here in India. Net the revenue is stable quarter-on-quarter. But when it goes to profitability, the profitability of Mamba is much higher than the ones in India, and therefore there is a drop in the profitability from the quarter-on-quarter perspective.
Thank you. The next question is from the line of Faisal Hawa from Edgy Hawa. You may proceed.
Sir, there was an announcement that we are getting into lithium ion mining also in one of the African countries. Is there any progress on that, and would it make a material difference to the balance sheet and the profit and loss of the company in future?
No, so we basically are exploring lithium concessions that we have been granted. We meaning MEL has been granted. We have about 11,000 hectares that's been granted. So exploration activities for lithium is currently underway. So it's at a very early stage right now to finalize any future plan in terms of what our involvement would be.
So which country is this in?
Zambia. It's a subsidiary of Mamba.
So is there a fair chance that there could be a good amount of lithium in that area?
I wish I could answer that. If I could answer that, we wouldn't need to do any exploration activities. So the whole point of exploring is to figure out, what the quality of the lithium in the concession is, and if it's commercially viable to mine.
And sir, with the cost of solar falling so dramatically, are any of these African governments also encouraging you to put up solar plants and successfully giving them the power?
Yeah. So, the current initiative we've taken, which is the 100 megawatt solar plant, was encouraged by the government, and hence we closed the power purchase agreement also at an attractive tariff. So there is encouragement from Zambia and other African countries for companies to put up solar plants.
And so if you could give some kind of a vision for the next 2 to 3 years, so where do we see our revenue and profitability for the next 3 to 4 years? And particularly in light of the recent buyback that we did in absolutely adverse market conditions, which I would really congratulate the management. We were amongst only 2 or 3 companies which did buyback during that time. So how do you see the next 2 to 3 years panning out in terms of revenue and profitability?
Well, I think, we currently have a very strong ongoing operational base, both standalone and internationally. So I think we would see all the current operating assets that we have performing well in the next 2-3 years. Apart from that, I think you would start seeing some added revenue from the projects that are currently underway, which the solar we're looking at commissioning by July 2026. The expansion of 300 megawatts we're looking at commissioning in August 2026. And your agri as your avocado will start generating some revenue at least end of this year. And also we see some progress taking place on the Ivory Coast level. So I think with all these in the next 2 to 3 years, the future looks good.
Thanks a lot. I appreciate your answering my questions.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Anand from CIN. You may proceed.
Hello, sir. Thank you for taking my question again. There is a target that you have put, in one of the presentations I was reading, that we are going to increase external sales of coal mine from 40,000 tons in 12 to 15 months. So what kind of sales, are we targeting, and what is the capacity of the mine, sir? And will this mine be able to suffice the coal requirement for phase 2 of the power plant?
Yeah, so in terms of supplying coal for phase 2, definitely, because we wouldn't have started with the phase 2 project if we didn't have the coal or the fuel security. We have a very large concession area, and we have ample coal for both phase 1, phase 2, possibly even phase 3, and any amount of outside sales. With regards to any specific target for external sales, we are essentially targeting about 35,000 tons on a monthly basis. Today we have other competing coal mines, so there are challenges that are involved, but as far as our external sales are concerned, we are doing fairly well. But if you look at a target, it's about 35,000 to 40,000 per month.
Okay, sir. And sir, so you talked about converting your power plants to IPP. So will that not reduce the alloy production? Because you are converting your power to you're selling it to the grid.
It won't, because right now in Orissa we have 2 furnaces which require a maximum of about 30 megawatts. So that will remain intact. The additional 60, which is also under captive right now, is now being transferred to IPP. So there won't be any change to the ferroalloy operations.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Radha from BNK Securities. You may proceed.
Hi, sir. Thanks again. So for the 100 megawatt of solar plant in Zambia, could you highlight whether the terms and conditions will be similar to the second phase 2 of Zambia power plant, and whether any tax benefits will be there? When will it be commissioned, and what is the expected PLF in this plant?
Yeah, so in terms of the commissioning of the plant, I think I've repeated myself multiple times during this call. We're going to be commissioning in July 2020. I mean, we're planning on, at least the date is July 2026. This is a solar plant, and the other plant is a coal plant. So there are certain similarities and there are certain differences as the terms and conditions that we negotiate with the government.
PLF, sir?
Sorry?
PLF, what PLF are you expecting from solar plant?
It's too early to say. Right now, we've not, narrowed down on, the panel manufacturer. That's currently underway and under discussions in the EPC. But I think the PLF we are targeting is about 20 to 22%.
Okay, sir. So secondly, currently we have a net cash of about 580 crores. So what is the peak debt that we are expecting considering the future capex plans, and overall what is the capex, if you could highlight for the next 2 to 3 years per year?
Sorry, we didn't get you.
Can you repeat your question, please? Is it about capex plan?
Yeah. Yes, sir. What is the peak debt that you're expecting for the next 2-3 years, and what is the per year capex plan for the same?
Operating and maintenance capex is generally around $25 million per year, and these are consolidated numbers. This is only.
Yes, sir. You were telling about the maintenance capex being $25 million per year, post which we lost you.
Yeah, that's right.
Yes, I had asked about peak debt and capex plan for the next 2-3 years.
So this is the capex plan for the next. This is the maintenance capex that we have, and we also have the expansion projects which have been explained during the course of the call.
And what is the peak debt you are expecting, sir?
Sorry?
Peak debt to fund the capex.
Debt should be around, $250 to $300 million, taking all the expansion projects together.
Okay. And we expect to take that.
Okay.
He is closing it.
Thank you. Due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
As we conclude, I would like to reiterate that Nava Ltd remains focused on maintaining operational excellence, delivering value to our shareholders. We are optimistic about our future growth prospects and will continue to strengthen our position in our key business sectors. Thank you for your time today, and we look forward to your continued support.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.